Taking that live now.
Okay.
Just a second. All right. Okay, so we're in. All right. And welcome once again, everybody, to another Facebook Live of basically the live version of Open House with Team Reba, with me, Reba Haas of Team Reba, Remax Metro East Side, and this guy.
Yep, Eric Osnes from Homebridge Financial Home Mortgage.
Yes. So I hope everybody had a great Memorial weekend. I know me and my team got the weekend off for the most part. Had a couple little bits of client interactions here and there because we are up and running and working right now. But generally speaking, everyone got a chance to really enjoy the time away and got some time for reflection and gratitude. And I was super excited to see some of my family members back in Kansas, going and actually visiting a bunch of the grave sites of some of our longtime family members that have, since passed on, and many of whom were military. So appreciated seeing those photos and getting a chance to reconnect with family over the weekend. So hopefully everyone else got a chance too. I saw you were Mr. Clam Digger.
Yes, I was. And, everybody followed proper social distancing. Nobody messed with my clam hole.
That's right. We want to make sure nobody messes with your clam hole, Eric.
Right.
I'm never going to forget that phrase. It's just too funny. But anyway, hopefully what's not funny is what's going on in the market. So shall we, how are we doing after the holiday?
Yeah, so far so good. The financial markets were closed on Friday afternoon and closed yesterday. So today's our sort of first day back up and running. We started the morning a little bit on the negative side with some upward pressure on rates. But since then, things have settled back down as the Fed has jumped in, as they have been every day, and they're buying mortgages. So we've actually, we're kind of holding steady. Rates are almost identical to last week so far. So the standard national average for a standard 30-year fixed rate conventional loan, right around 3.25%.
Nice.
FHA and VA, we're hovering around 2.75%. And jumbo loans, King, Pierce, Snohomish counties, anything above $741,750. We're hovering around 3.875. So still higher than a conventional, but not nearly as high as they were even a couple of weeks ago.
Yeah. So, okay, let's review that for anyone who hasn't seen one of these shows before, or even if they've been following them but not taking notes like I've been doing on my fine notepad here. All right, so going back to where were we tracking some of those rates? Because before we were doing VA and the conventional, not so much the jumbo.
Right.
Starting April 21st, when you reported some of the jumbo rates, we were at 4.25.
Mm-hmm.
And then May 1st, they were kind of jumping around. Oh, I think the 4.25 was the rate that you were saying, but if you paid points, you could maybe get to 4, right?
Right. Yeah. Jumbo rates were definitely beneficial to pay a loan fee, pay points, and now that's still the case. With 0 points, we're hovering around 3.875, but with 1 point being 1% of the loan amount, we would be right around 3.5. So still paying a fee gets you quite a bit of bang for the buck with a jumbo loan.
Right. Yeah, no, that's actually fantastic. I'm very curious. One of the things that came up for me in the last week in some conversations with people was what's going on with the condo market. Now, I don't have stats yet because I took the weekend off. But I want to try and get some stats by our Friday call for this, because you and I have talked on our radio program about how the rental market was getting impacted when we had all the high rises coming online over the last couple of years in downtown Seattle. And of course, with COVID-19, there's a big question mark about what's going to happen, because I have heard that there are as many as 10% of those units now vacant in downtown.
Yeah.
Because a lot of folks with, COVID, just, especially if they were from somewhere else, they up and left, and literally there's apartments with furniture, like fully furnished, just sitting there.
Right.
And we actually have a transaction we're working out with on a residential client right now. Well, that's exactly what happened. They are now going to acquire furniture that was left in this house. And it's some pretty nice stuff and two very nice big flat screen TVs, because he was a foreign student here
Oh, yeah.
from China, and he left his stuff and went home.
You're off home. Sure.
Yeah, so it's not easy to try and get those things shipped internationally right now, of course. So he is foregoing doing any of that, and my clients will benefit from it, so to speak. Just a reminder, everyone, we don't love getting personal property involved in a transaction, and I can tell you, he is leaving those things at zero cost.
Right. That's important to me.
Yes, very, very important.
Yeah.
Distinction there. I will be taking a look, because then the question came of like, well, how does that vacancy rate in apartments translate potentially into the condo market? But the thing is we've been really behind condos. We're really, really flat for a long time, partly because when we had the housing crisis, nothing new was being built. And a lot of the FHA condo approvals went away in 2012 across the board, right? As you know, Eric.
That's true.
And so we've had a period of time where they were partly hit by FHA doing that, because a lot of people use condos as like their like entry into the marketplace. So it's a lot of first time buyers, not always necessarily people with large down payments or great credit. So it's always been a good option, but it's already usually a smaller percentage of the market that actually get FHA approval. And so when they wiped all that out in 2012, they really impacted the condo market across the entire United States, including here in the Seattle market. But what helped it then, because 2012 was when our market turned around, as the market downtown grew, in particular because of Amazon growth, well, we went from no, growth for a couple of years in condos to suddenly we went to 25%. Mm-hmm. Because everything that was coming online was now apartments, big luxury apartments. And so it was rare to find a building that was actually for sale. Right. So now there are some condo projects going on downtown. So it'll be interesting to see what happens with those as well. So we'll be keeping an eye on what's going on in the news locally in the market for that. But, and especially with how we may be changing how we work.
Well, and I'm going to be curious with condos over the course of the next 6 months or so, how this pandemic impacts our approvals. As a lender, when we work on a mortgage for a condo project, there are certain requirements that in most condos, most loans we want to see happen. The first one is that no more than 15% of the HOA of the owners are delinquent on their HOA dues. Right. So if
1.5, not 5.0, right?
1.5, yeah, 1.5. And so we also look at the percentage of owner occupants in a project and like to see that at or less than 50%. So we'll see what happens with that, because as this high unemployment rate impacts our lower income earning, population, folks that work in retail, restaurants, things like that, I could possibly see, the delinquency rates on HOA dues rising, because that's a fee that maybe if you stop paying it now, it's not going to bite you right immediately, at least. So we may have to keep a pretty close eye on that.
Yeah, so I think that's definitely something that we each can be looking at. So I am also going to point out something else that recently came up, because we did successfully last week close on a transaction for a client in a new condo unit in downtown. If you are considering a condo, live in a condo, whether you're renting and or owning it, if you don't already know this information, I do want to share it with you. We seem to have started a trend, as the listing agent emailed me. We had a client buying. One of the things that I learned very early on in my real estate career was the idea of, one, there's the condo building has its own insurance, but then individual unit owners can have insurance. But here's the crux. Not every condo association requires it.
Right.
There are people who are residing there. That can become problematic when you happen to be in a building. Well, actually, all buildings have water because you can have plumbing going anywhere. Now, some of them have centralized water. That's probably going to be more of a HOA issue. However, when it's damaged into your own unit, you're not necessarily going to be covered by the HOA, nor for deductibles, which often can be as high as $10,000. So we've talked about this before about condo insurance. What was interesting was our client was going through the review. We give strong recommendations to go through the entire resale certificate, which is the CC&R, so conditions, covenants and restrictions, its bylaws, meeting minutes, reserve studies, which is an engineering study about the building itself and the whole envelope, kind of like I got this little square around me, your building's got its envelope. So all the systems and everything else is there, including the parking lots and all that kind of stuff, right? So there's a lot of information buried inside of those things. And one of the things I asked them to please look for, because it was also important during the inspection period, is do they require water heaters to be replaced within a certain interval of time?
Yeah, very important question to ask.
Because home inspectors are required to call them out as soon as they're 8 years old. And they can last 8, to 12, 15 years easily. This building was 20 years old and this water heater had not been exchanged yet. So we started asking a lot of questions. And this is now going to be the third owner of this unit since the place was built. So the last owner only lived there 5 years. They never changed it. So we're like, well, pretty good potential that the first person never did then. But here was the other difficult part of it. That water heater is behind the washer and dryer. So is the water shutoff valve. Like, who the hell came up with that design?
Yeah, been there, done that.
Water emergency. Oh crap.
Yeah.
So anyway, a lot of people think that that you don't need to do home inspections on condos. And I am here to tell you, without us doing these things, we did negotiate a brand new hot water heater that was installed just last week on behalf of our customer. And we got that negotiated in that because we couldn't get a credit because my client was already getting his closing costs covered by his employer. So it didn't matter to do a credit. So it would be like no money for him at all because he couldn't use it, right? It would just go back to his employer. So what we ended up doing is you have to think forward. And so what we ended up doing is that owner agreed to prepay 4 months of homeowners dues which ended up being more than what the work was to have the hot water heater done. And so that worked out very, very well. So now my clients have 4 months without the HOA dues. They've gone ahead and taken care of the hot water heater, and now they know. But when I said that the listing agent sent me an email saying, oh, you've started a trend, because we were in contact with the property management company, asking our clients to read all the documents and look for this specifically, and then bringing it to their attention and finding during the home inspection that indeed it was the original, because we did have a tall enough guy he could get a camera in and get a picture of the serial number. So we were able to confirm it. It helps to have the right people. That's all I can tell you.
Tell me about that. Yeah.
Yeah. So anyway, we got all that taken care of. And apparently the HOA, at least property management, has now sent out an email to the entire population inside this building and said, it has been determined that you are responsible for any damage caused by your water heater failing.
Oh boy.
Think about that. They have now abdicated responsibility as an HOA because the hot water units are in each individual unit.
And can I just say something? You mentioned that not every condo project requires you to carry your own individual insurance.
Yeah.
You should, no matter what. Here's why. Because most HOA insurance policies, they have what is called either a walls in policy or a walls out policy. A walls out policy means the master policy for the HOA only covers everything outside your sheetrock. Walls in covers your contents, kind of like a normal homeowner's policy, but the deductible is really high, usually about $10,000.
Yeah.
So you purchase a supplemental policy. It's called HO6.
Yep.
It's dirt cheap, really expensive, maybe $25 a month. But that has a very low deductible.
A couple lattes at Starbucks if you get a Venti quad shot with extra vanilla pump, whatever.
Let's see, that or $10,000.
Yeah.
So, but what happens is that HO6 policy will pay the $10,000 deductible with just a very small deductible. So even if your condo project has walls in coverage, we still very, very strongly recommend you purchase that supplemental policy called HO6.
Yes. And I will tell you, when we quizzed the property management company about whether or not they knew how old everyone's water heaters were, they said, well, some people give us the info, but not everyone.
Yeah.
So you take on risk, because when you got a 6-stack, or higher building, well, water doesn't go anywhere but down. It might find some other ways for a little while, but it's eventually coming down.
It can get very creative. Yeah, that's for sure. Hey, one other thing too, if you just mentioned like the double stack appliances and all of that, it is possible to rent the amazing device called an air sled, and you can get them at a tool rental place. It's like a thin mat. You slide it under the appliance, you hook it up to your vacuum, and on opposite, it creates a cushion of air like a hovercraft, and you can very easily move heavy objects, appliances around and things like that without mucking up your floors. Really, really cool thing called an air sled.
What a lovely little tool you just shared.
There you go. That's right.
Yes, we're just filled with all kinds of interesting factoids today.
That's why we're here.
Yes, that's right. Well, I mean, that's experience along the way. So anyway, yeah, so we wanted to make sure that everyone knew about that, and that, while you're still in purchase or sale, because if you're selling, that's, this is very likely. I mean, 17 years of this, and I've had water heaters come up a lot. And we have negotiated them a lot. So be prepared, and especially if your HOA does have buried somewhere in those CC&Rs or bylaws that you didn't take the time to read that it's necessary, you're going to have some people really pushing to get that done. I can tell you, Eric Dow of Eric the Plumber, who's a longtime contact of mine and friend, he did the work for this client, and, totally reasonable price point. It's under $2,000. I think it was around like 1,600 or something like that. And he even, for an extra $150, moved the washer dryer out of the way, kind of deal. And so we're thinking we may actually do a mailing campaign to that entire complex, just to, one, send his information and say, hey, by the way, this stuff has been coming up, and now your HOA is paying attention to it. So if you're going to be in the liability position, it's a lot easier to control the cost of the replacement now than in what happens if it leaks into your neighbor. Because I'll tell you, they probably got more than $10,000 worth of stuff. And any damage, because water damages a lot. It damages fabrics, drywall, cabinetry, flooring. And when you got a 50-gallon tank in there, that's a lot of water coming out. So anyway, I think, I want to give my little screen share like we've been doing here real quick. Hold on, let me get my matrix up here in the background and do my little share screen so I can get these numbers so we can compare. All right, back again to the Market Watch numbers. So I'm going to change my color of pen of choice here. So comparing to the last time we did one of these shows, which was May 19th, because we took Friday off. Okay, so new, we're at 1,724 new listings. On May 19th, we were at 1,815, so we're down just a little bit. Back on market is 275 as compared to 297, so not too far off. Price reduced, 810. So we're still staying over the 800s because we were at 886 on the 19th. And pricing up was at 158 last time, and we're at 149 again, kind of pacing at the same level. Pending, 3466. We're definitely still pacing. Pending on May 19th was 3,474. So we're still doing really, look at the bar graph difference there between new listings and the pendings. and the solds are 1452. So that's up just a little bit from 1398. And again, we were expecting that because we're getting out of that 17,000 units that were under contract when COVID kind of hit and smacked the market. But you can see we're back with a vengeance right now. So this pending bar here is telling us a lot about what's going on with buyer activity. And there's a lot of folks out, a lot of inquiries we're receiving. We went through our team meeting today. Normally we do it Mondays. We had to do it today because of the holiday. And we have quite the list of people who are in the market. So just be aware of all of that and make sure, because here's the thing, we still can't do open houses. They've opened up a virtual open house option for real estate. But that means just a person, the agent, can be in the house filming as they walk through, basically with a camera, kind of like this. So again, can't state it enough. Looky-loo inquiries are not being well received right now. If you are not already pre-approved with a lender, most agents will not take you out because one, they take their own health in their own hands. Sellers are often demanding, through their agents that people be pre-approved before they're allowed to walk through the property. So, just be aware of that, and you have to follow protocols when you're there. So, because we still have or hear of people where like whole families show up to come in, and believe me, a seller, especially if they're still residing there, is not excited about having people come in that they don't have any control over and touching their things, particularly children, because they're going to touch stuff because that's just the nature of who they are. And we as adults don't even recognize sometimes the amount of times that we touch things. So, just be aware, cognizant, respectful, and come prepared. They are, we're following the recommendations around face masks. Seeing that pretty regularly. Clients are showing up their face masks. So, just throwing that out there, but we are still showing, and clearly a lot of people are still buying. So if there's anything we can do to help you, and if you're thinking of selling, man, get in touch with us. We've got a lot of people back active, getting ready to sell their homes. There is still fear. I'm still hearing from a bunch of people that they think there's going to be, a big drop in prices. We're not seeing that. Eric had a report at our radio show that we were recording a couple of weeks ago that said specifically since the beginning of the coronavirus shutdowns in the Seattle marketplace, it was between 10 and 11% growth.
Right. Yeah, it's and every single transaction I've seen in the last month has had multiple offers on the property. So again, the number of buyers is far outstripping the supply of homes out there. And you saw that with your statistics.
Right. Yeah, exactly. So all right. So we're going to keep it short today. We want to thank everyone for paying attention and, listening to the information. If there's something that you think is useful for someone to listen to, you can share this or you can tag them in it. We know we have people that have been doing that, particularly if you know somebody who owns a condo or is thinking about condos, please let them know, because this is a great video to share with them because we just had a lot of really great detail around that purchase process. So, and safety inside your own unit. So anyway, all right. Thanks everyone. Again, hope you had a great long weekend and we'll chat with you soon.
Have a great week, everyone.
Bye.